Good morning, distinguished ICMA executives and members, market participants, ladies and gentlemen. On behalf of the Ghana Stock Exchange and ICMA West Africa Regional Committee, I warmly welcome you to this webinar. I also take the opportunity to wish all of us a healthy and prosperous 2025. I'm particularly excited about the growing importance of sustainable finance in addressing some of the pressing challenges of our time, including climate change and social inequalities. According to UNCTAD's 2024 World Investment Report, global issuances of sustainable bonds amounted to $872 billion in 2023. With Africa accounting for only $4 billion of this, less than 0.5% of the global issuances. Ladies and gentlemen, this is why ICMA's West Africa Regional Committee has called for today's webinar on sustainable bonds and how to use the ICMA principles to address the estimated $3 trillion annual global demand for sustainable financing, which is a huge opportunity for all of us. We'll also learn on today's webinar from an issuer and an underwriter about their experience using the ICMA principles. At the Ghana Stock Exchange, we are proud to play a role in driving sustainable financing with the launch of our sustainable bonds markets, as well as our ESG disclosure manual. Across West Africa, we recognize the transformative potential of sustainable bonds. These instruments enable us to mobilize the capital needed to finance key projects in renewable energy, transport, buildings, education, and healthcare, while fostering the transparency and accountability in the use of proceeds. Ladies and gentlemen, I believe that today's webinar is an excellent platform to share ideas, build capacity, and discuss actionable strategies for the development of a vibrant, sustainable bond market in all of Africa. As I conclude, let me take this opportunity to express our deepest gratitude to ICMA for its commitment to advancing sustainable finance globally and for partnering with us on this educational drive. For those of you who are not yet members, I highly recommend you join this global association. I also extend my appreciation to all of you participants for devoting your time to this critical conversation. Thank you, and I wish us all a fruitful and impactful session. And now I'll hand over to Simone Utemak for her presentation. Thank you.
Thank you very much, Abena, and good morning from my side as well. Let me just share my slides. Very pleased to represent ICMA, ICMA, we say both, International Capital Market Association, on this call today, and thank you for the introduction, Abena. So what I'm going to do in the next about 15 minutes is just give you an overview on the role of the Secretariat of ICMA and also the principles for sustainable bonds. This is just an overview on everything we do in sustainable finance. Sustainable finance is just one department, if you will, within ICMA. We're also just started collaborating with our fintech and digitalization colleagues to look at the nexus between the two areas. But just for today's webinar, be aware that we have been providing the Secretariat to the principles as they've become known, which is the green and social bond principles, sustainability bond guidelines for a mix of green and social, and sustainability-linked bond principles since 2014. So last year, we actually celebrated the 10-year anniversary of the principles, and they continue to underpin that market. They've really become the de facto global standards, and we have a look at every year about 97 to 98% of global sustainable bonds are indeed aligned to the principles. We do other things as well, maybe for another day, but just be aware we also provide the Secretariat for various codes of conduct, ESG ratings and data product providers. We often globally participate in platforms and working groups such as the EU platform on sustainable finance, for example, where we were involved in the green taxonomy. We're also a member of ASEAN taxonomies and transition finance working groups, and we're on behalf of our members responding to consultations to advocate for their view on regulatory initiatives. And lastly, we publish papers on topics that are prevalent or that are very imminent in the market, like greenwashing, transition finance in the past, and we're coming up to papers on funds and ESG ratings this year. Quick overview on the market. This doesn't go back to 2014, but really I think it demonstrates that the market is going strong. 2021 we saw the most issuance in sustainable bonds, and that was very much related to the pandemic as well, because that was also the year where we had the most social bonds being issued. But otherwise, last year, in total, we reached almost 1 trillion of issuance. And as you can tell from here, green bonds still take the lion's share. So that is the most popular one. Also in the African market, by the way, which you can see on the next slide. So here is a selection, or not really a selection, it's an overview really of the issuers that we found, and we've highlighted here if they've issued green bonds or social bonds or sustainability. Again, that's a mix of green and social, or sustainability linked, which is a different type of bond. So the first three columns are really so-called use of proceeds bonds, where we look at what is being financed. And the last one are so-called general purpose bonds, where the focus is more on the strategy of the issuer. This is continued. You see, it really goes from government issuances to industrial or corporate issuances and financial institutions as well. So how do we work? The principles are not created by ICMA. As I said in the beginning, we really provide the Secretariat for this, and that means that we work with the market. Every 2 years, we have an election of the executive committee of the principles. This is the latest composition of this ExCom. As you can see, it's equally divided between investors, issuers, and underwriters. And then there is a steering committee, again, existing of those 3 roles. We also are selecting an advisory council every year. So this is on a slightly different term to the ExCom, but we refer to the ExCom term here. So this was the last advisory council, and we're actually at the moment in the process of selecting this year's advisory council. So we have launched a call for candidacy, and watch this space, have a look on the website. You'll see the latest composition in maybe 2 or 3 weeks. So coming back to the principles, as I said, they're really the de facto global voluntary standards that have come to underpin the sustainable bonds market. So the principles themselves are what you see at the top as product standards. And then we also have a lot of guidance around that. The most important guidance I want to highlight here is the one on climate transition finance, which is a theme under the principles. That also includes just transition references, of course, on the social side. And then also impact reporting, which is increasingly important to especially investors that don't just want to know how has their money been allocated, but what has been achieved with their money. Transition is increasingly important. It's a very important topic for Africa, of course, as well. So that's why I wanted to highlight the guidance that's relevant to transition finance again here. Of course, all the principles, as I just said, transition is a theme, so you can finance that with a green bond. If it's related to the just transition, you could finance it with a social bond. Or if you want to underline a strategy for a transition strategy that an issuer has, then you could also issue a sustainability-linked bond or SLB. And then you have the thematic guidance, again, the Climate Transition Finance Handbook, as CTFH, as we call it. And last year, we published 2 brand new guidance documents. One is for green enabling projects. So that's for anything that's not green yet. As an example, the mining of minerals relevant to Africa, of course, as well, which will then be used in, for example, batteries for electronic vehicles. But also guidelines for sustainability-linked loans, financing bonds. So that's something new that we've seen in the market as well, explored by the likes of Nordea, for example, where they have bundled the sustainability-linked loans into bonds. And I think Razvan is going to mention a case study on that as well. These are some other practical guides that we published, not under the XCOM of the principles, but really with the help of the Secretariat and other market participants like UN organizations, UNEP-FI or UN Global Compact, but also MDBs such as IFC or ADB, also the Islamic Development Bank. One was bonds to bridge the gender gap. So that's really how can you finance that under social bonds, and then bonds to finance a sustainable blue economy. How can you finance how can you raise ocean finance, for example, under green bonds or sustainability bonds? And then also last year, following an agreement we made at COP, we published guidance on green, social and sustainability sukuk. So how do the bonds work? I'm not going to go into too much detail here. We do offer educational courses as well if you really want to learn more about this. But just as a general differentiation, I just mentioned that we have use of proceeds bonds where we look at where does the money go, which projects or activities are being financed. And that's really built across 4 pillars. So first we look at what I just said, the use of the proceeds. Then we look at the process for project evaluation and selection. So why has the issuer selected those projects? The third pillar, how is the issuer managing the proceeds? And then lastly, reporting is divided between allocation reporting, where does the money go, and impact, as I said, what is being achieved with the money. And then there are 2 recommendations, which are really standard in the market by now as well. The issuer would publish a bond framework pre-issuance. And then there is an external review. Mostly that takes the form of an SPO, a second party opinion, to confirm the alignment with the principles. This is just an example across the environmental objectives. This is what can be financed. This is more detail as to what can be financed, which then contributes towards those environmental objectives. Just picked out one example here, climate change adaptation. So you see that when you look at the guidance or the principles rather, then you will actually get more examples as to what could be financed under each category. But that being said, the principles are really non-prescriptive. So there could be other things as long as you justify how you think that fits under a certain category. On the social side, we have the equivalent with social projects. And as you can see, just transition is being highlighted here as well. As I mentioned, you can issue a social bond to finance just transition projects. And then what's different on the social side, because we don't have the science, we don't have the evidence-based data. For social, the issuer should also specify the target population, so who is benefiting from these projects. Let me come to transition finance. As I said, this is one of the most important guidance documents that we have. It was updated last, well, it came out in 2020 and it was updated last in 2023. It really consists of those 4 key elements, and you should use it in conjunction with the principles. So if you're issuing a green bond, or a sustainability bond, or even a social bond, or if you're issuing an SLB to underline a strategy, just be very transparent, because that's going to help you as an issuer. I know we're going to have issuers or potential issuers among the audience as well, to be more credible. So really publish your strategy, and ideally also a transition plan to make it more concrete. As you know, globally, there's an increased emphasis on transition plans. In the UK, we've had the Transition Plan Task Force, which has been integrated into the ISSB reporting standards as well. In the EU, it's become mandatory under CSDDD, which is a directive. We're not going to go into regulation now, but just to say transition plans becoming more important. And there you should also highlight if you have any incorporated any considerations on just transition, of course. Make it clear why this is material, why you need to raise finance. Are you otherwise going out of business potentially, or do you want to make use of any opportunities that this offers? And then also be clear on the strategy being science-based. So don't just make any numbers up, but really refer to numbers internally that you have on your books. And then also there is a lot of guidance out there. We have a separate methodologies registry that we provide, Science-Based Targets Initiative and others come to mind, that can help you formalize your strategy in a credible way. And then lastly, really be transparent on how this is being implemented internally. At the bottom, again, it's highlighted that this can be used with different bonds. And that's really also to say, we don't have transition bond principles, but at the top, the green arrow really underlines that, of course, if you issue a transition-themed bond, you can, of course, call it a transition bond as well. And then lastly, thinking of time, just to say that the principles have served globally, have really been adopted in regulatory standards and local guidance. Just want to highlight some in the EU, of course. Relevant globally as well is the EU Green Bond Standard, which has come into force in December. So that is really based on the green bond principles, and ICMA was also involved in that. Then in China, we have the China Green Bond Standard, Green Bond Projects Catalog, and they've really adopted the principles as well in 2022. In ASEAN, in 2017 already, we've seen an adoption of the principles. And Japan, I want to mention here because they have also adopted the Climate Transition Finance Handbook and adapted it to their local needs, which was, of course, important when they published their sovereign transition bond, or issued that rather last year. And here, just I don't want to go into details. I just highlighted some African countries, so you see that it's really being adopted and adapted widely. Quite often, countries come to us and want us to have a look at what they put together, which is often an amalgamation of the principles and the guidance that we offer. I finish here and very happy to respond to any questions later on when we have the Q&A. And for now, I'm going to hand over to Razvan from ENBD Capital to talk more about the issues or the underwriter perspective. Over to you, Razvan.
Thank you, Simone. That was a spot-on presentation. It will be pretty challenging to follow you, but I'll give my best. It's a pleasure to be here, and of course, with the distinguished colleagues and members of the ICMA. Let me quickly share the screen. 1 second. Super. So I'm Razvan Dumitrescu, and I do lead the efforts for Emirates ENBD Capital on sustainable finance. The entity is an investment bank platform based in the Middle East, but we do service the world. And why do I flag that? For different reasons. One of them is that in the past 2-3 years, the region did witness a fast-track development when it comes to sustainable finance. Key drivers include COP28 being hosted here, but also local authorities initiatives such as the 1 trillion dirham, which is roughly $270 billion worth of sustainable finance to be mobilized by by regional and international banks out of the UAE. That also gives you a flavor why perhaps out of this region you do have and see many participants keen to structure or invest in labeled bonds or loans globally. Now, when it comes to some of the key developments that we also witnessed was the SLLB. I think Simone also alluded a bit to it. That was, I think, the first issuance globally to be released after the guidelines in June. And that helped us a lot in terms of increasing transparency to the SLL book, but also in terms of the pricing, which led to the tightest spread for the year in the region from FI in conventional, not Sukuk format. We also had the pleasure to support Simone and the team on the sustainability Sukuk that was just released after the COP 28 in the region. And again, that part helped us then to literally structure the sustainability Sukuk for Emirates Islamic, which Sukuk, as many of you might know, is literally similar to a bond. It's just the Sharia part has to be in place. Now, another key part development would be in terms of the impact reporting task force on SDG. And why do I mention that? It's since DP World, which is a leading ports operator in out of the UAE, they were the first to issue such SDG globally in terms of part. And they also actually had a follow-up blue bond very recently. Of course, a few other key developments was in terms of acting a lot on the structuring SLL, sustainability linked loans. We do see a lot in the wider region, as I said, via the authorities, but also thanks to other key laws that are being enacted currently, such as the federal law in the UAE, where that's going to enter into force in 2025 on the climate change, and also MRV in Abu Dhabi, the MRV program in terms of monitoring, reporting, and verifying carbon emissions. So all these are kind of drivers that do help us in this development. Now, I think Simone alluded already in terms of what you have in terms of the use of proceeds, and also like in terms of the format, like the general corporate purposes in terms of sustainability bonds. And I think the slides also going to be available afterwards in that part. Also like in terms of what can be eligible and also what can be covered. I'll maybe pay a bit more time on the African jurisdiction, like African continent itself. As you can see here, we do see around $13 billion worth of label bonds issued so far. And interestingly enough, you do have a lot on the green, social, sustainability, and only just a small fraction on SLB. And I know there's a Q&A on that point, but we will address at the very end on top of that. Interestingly enough, when you look in the labeled loan market, in the private market, you see the reverse outcome. You actually see more than 20 billion loans that are being captured by environmental finance. And majority of them, they're actually sustainability-linked loan format. That's similar to what we see in Europe and many other markets, also like emerging markets, also like here in the region, in the Middle East. And that tells you something in terms of the scrutiny, in terms of transparency, in terms of the willingness from investors and lenders to capture it. I can also think of, for instance, one key issuer, top-notch issuer from the UAE. They do have a spot-on sustainable finance framework that can also allow them for SLB, but they never use it, given the latest increasing scrutiny on the overall market, I have to say. I think when we think of your key jurisdiction, we also benefit from lots of innovation. In the previous role with EBRD, we were involved in the Scatec Green Project Bond, which basically was used to refinance an operational solar power plant in Benban in Egypt. With, I think the tenor was around 19.5 years. And the project bond actually benefited from a credit enhancement from MEGA and EBRD. Similarly, as you might know, there's also like debt for nature swaps in featured and emerging out of Africa. And depending on how the proceeds are used, that can also be in a labeled format, as we've seen also in various jurisdictions globally. And last but not least, a very interesting trade was regarding the sustainability-linked bond done by Development Bank of Rwanda, while again leveraging on a IFI credit enhancement. And I believe in this case was the World Bank. Now, in terms of the trends, especially on the label bonds, when it comes to green bonds, social, sustainability, in the use of proceeds format, the allocation, it actually is in line with the global trends in terms of renewable energy, clean transportation, and also in terms of the power grids in that respect. Other than that, we did witness, and I think it's pretty important to look at the municipalities. As you might know, like from the World Bank studies and other IFIs, like 78% of global CO2 emissions are actually accounted around cities. And here, one good case study is the city of Agadir in Morocco. In terms of the process, I'm aware that I think Simone already touched a bit on about it. Here we have literally the very in-depth coverage of ICMA resources, and here we have the links to all the valuable input that's available on the website. Here on the left-hand side, you see a bit of a comparison in between the SLLB, the Sustainability Linked Loan in Bond process, versus the GSS, the use of proceeds. All of them featuring management of proceeds, the use of proceeds portfolio, how you evaluate and select, but also on the reporting. Of course, everything well calibrated along the framework and the second party opinion. Now, more specific to the region, I think like from Emirates NBD capital side, we did have the pleasure to support the Arab Bank for Economic Development in Africa. As part of their issuance, social bond issuance, 500 million euros that has been well placed January last year, like almost a year ago. And literally in terms of the use of proceeds that have been allocated to, included the ones in terms of affordable infrastructure, access to essential services, affordable housing, and so on and so forth. As you can also see it here. And it did help in the sense of also attracting the investor base, mobilizing the investor base from the Middle East. As you could see, as you could might be aware, the investor base here is increasingly active, both in the Sukuk, in the Sharia format, but also in the conventional space. Why I touch a bit on the sovereign SLBs, since I have to say I'm a great fan of it. I usually see and prefer to see where such, let's say, authorities, or when you have like kind of a top-down approach, because it sends a strong signaling. We did witness in the Nordics, several municipalities like Helsingborg, they did issue SLBs and then followed through by the private sector. But also we had 3 sovereigns so far, like Chile, Uruguay, and Thailand, very recently tapping the SLB market. And these parts are well calibrated, and they feature KPIs which are tied to the greenhouse gas emissions, but also to renewable electricity generation or native forestry area. And these are very good incentives to capture at the macro level, but also provide a valuable signal as you progress towards sub-sovereign to municipalities, and then all the way to the private sector. Now, when it comes to the Emirates NBD, we did issue the SLLB, the $500 million just after the issuance of the guidelines benefiting from ICMA and LMA, and there are few drivers. One of them being the increasing share of SLLs on the balance sheet, and then we feel like, okay, and as you've seen also like in your leading jurisdiction, but also in other mature markets, SLS, they are an increasing, even majority part of the private labeled loan book. And we feel like, look, we have to, this product provides you a lot of benefits in terms of transparency, engagement with investors, in that respect, but also when you support the clients on their climate transition journey. Because in this respect, in the Emirates NBD at the group level, they went to the second approach, whereby each and every SLL would require a second party opinion. in that part. So literally mitigate some of the concerns from the investors in that part. And of course, as we progress, there is more rationale here in the sense what triggered the deal. I have to say that I think the Nordea deal was super helpful, seeing in the market. I believe they were even a bit more conservative than us in the sense of the portfolio used in this respect, like for the Emirates NBD when the SLLB occurred. I believe like it was pre-allocated like around 50%. Free for SLLs, just to give a flavor. But there are also like other approaches where, like I think Nordea, they had more than 100% from day one. And if you look at some think tanks like Anthropocene Fixed Income, they would, I think, prefer to see like 0% allocation from the day one, because then the impact to derived would be much larger because you'd allocate only to new SLLs. In terms of here, the impact objectives, the core and the secondary ones, which are well aligned to the overall strategy and governance of the bank. And here, in terms of a bit of a summary, that goes very well and aligned to what I've been sharing earlier on. Here, also want to flag a bit on the Sukuk aspect. Here, it's actually a sustainability bond, even though at the time it was more presented as a transition Sukuk. Just to give you a flavor that there's this opportunity and to calibrate even in the Sukuk space, and hopefully, why not at some point maybe we even see a sustainability loan in Sukuk format or other parts. And that will also go very well and hand in hand with the increasing investor base that are looking for a kind of Sharia compliant mandates. I think these are the last two slides. It's more like in the sense of some of the recent deals done by us and the team. You'll have available the slides afterwards. So I think, there's also on the equity capital markets, but that's for a different time. So with that in mind, I shall thank you. And I'm aware there are a few points on the Q&A address, but I believe we'll leave them for the very end. And then I'll leave the floor to Benga from Access Bank. The floor is yours. Thank you.
Hello, everyone. Good morning, good afternoon, good evening from wherever you might be from across the globe. My name is Benga. I will just be sharing Access Bank's experience with respect to the issuance of the green bonds that we've issued over time. And I'll just quickly pull up my screen. Kindly confirm if you can see my screen.
We can.
Yes. Thank you very much. So I'll just be covered by this content and the content of what you have on the screen now. And I will just quickly go straight to the issuance of green bond in Access Bank, what drove it, what are the benefits that we've gained over time, what are the challenges, and I feel that at the end of the day, there will be a big opportunity for people to have a feel of what has happened and be able to learn from it. So the sustainability vision of Access Bank statements that we can see right on the right-hand side of our screen underpins the reason for the issuance of our green bond. And that is, the statement is to be the sustainable and respected bank in Africa. Our plan stem on the need for us to finance and facilitate brighter future for our stakeholders, and driving that through putting financial offerings and services that better our stakeholders. And taking that forward, the plan was to put on financial offerings that improves lives, that foster economic growth, and create shared sustainability values to our stakeholders. So Access Bank is a bank that is deeply rooted with African footprint, and our plan is to do everything that's aligned with global best practices to champion sustainability-focused regulation and adhere to relevant laws and international best practices that drive sustainable finance offerings and opportunities across our footprints amongst our stakeholders. This is why we ventured into issuance of green bond, and the alignment of that our sustainability commitment underpins why we issued the green bond. The overarching sustainability strategy of Access Bank around issuance of the green bond is linked to sustainable development goals and making life better for each and every stakeholders. And I'll just quickly give you a brief background about Access Bank. So Access Bank is Access Bank was established in 1984 from obscurity, and today in Nigeria, Access Bank happens to be the largest bank in the country. And what has actually really helped us is our strong footprint on sustainability. So the sustainability journey for Access Bank started just less than 2 decades ago, 17 years ago as of today. In 2012, just about 2012 to this time, which is around 13 years or thereabouts now, the bank initiated a very strong footing on sustainability. And we developed what is called Nigerian Sustainable Banking Principles, which is the footprint that the industry uses today to drive the sustainability architecture of the country. And when we did this, we partnered with Central Bank of Nigeria. So the policy in question is being used by Central Bank of Nigeria now and all other banks that we have in the country. I will be sharing as we move forward around the green bond that we issued, what were the imperatives, what were the lessons learned as I mentioned them to you. So today, Access Bank has actually issued 2 green bonds. The first one was issued 7 years after the sustainable banking principle that I mentioned to you earlier on. And subsequent to that, in 2022, we also issued another green bond. The first green bond was labeled under climate bond taxonomy. CBI, climate bond taxonomy, is an entity that is based in the UK, and it was also verified by PwC UK at that point in time. The value of the bond was $41 million. The pricing was 15.5%. At the time that we issued this green bond, it was the first corporate green bond issued in Africa that has CBI label and ICMA that has CBI label and also verified by PwC UK. And the second one, the second one that we issued was based on ICMA green bond principle label, and it also has SPO from Standard S&P. So this is the overview of the issuance process of the bonds of the bond in question. The bond was okay. So the bond had listing. The first one had listing in all the national exchanges that we have in the country, Nigerian Stock Exchange, FMDQ, and also had the listing in the Luxembourg Green Exchange. So what I have here is just 8 boxes that showed the processes or the steps that needs to be undertaken for the issuance of a green bond. The first one is around initiation, which for issuance of green bond, it is not something that starts and ends in a single unit across the organization that might intend to issue the green bond. In that case, there needs to be a very robust engagement within the system, talking to the business people, talking to the people in control, talking to Treasury, getting relevant and requisite approvals that both within the organization and of course also from several stakeholders that we will see as we move move forward during the course of the presentation. Of course, something that is very, very important is the tone at the top, the board, the executive management involvement and support to drive a successful issuance of the bond. And because the instrument in question is something that is relatively new, or possibly in the organization that has not issued it, the need for capacity development, looking at what does ICMA say about it, what are the global best practices around it, how do you need to drive a successful end-to-end issuance, because the first point is around issuance. The most important at the end of the day is ability to demonstrate the impact, the accountability, the transparency that comes along with it, and the need to delight the interest of multiple stakeholders, starting from the investor to the regulator and other relevant key parties to the issuance. When Access Bank issued the bond, like I mentioned, it was a maiden instrument at that point in time. That was part of the challenges that we had at that point was the regulation, the shortfall. There was no regulation that speaks to from the Securities and Exchange Commission, who happens to be one of the regulatory body that drives issuance of a noble instrument like that. So the partnership engagement with several stakeholders, from the central bank to the Securities and Exchange Commission, even to the exchanges in the exchanges that will support with respect to the issuance of the bond. And one very, very important thing is the need to have a framework that speaks to the governance, the processes, the procedures, and the need to have the committee, the Green Bond Committee, that will drive the issuance of the instrument. And of course, not only the issuance, the management of the instrument, the reporting. And so the Green Bond Committee the Green Bond Committee in Access Bank cut across multiple top management staff with diverse over 100 years of experience that will be looking at successful and implementation of the bonds in line with governance and global best practices requirements. And like I mentioned earlier on, apart from the multiplicity of stakeholders within the system, there are also multiplicity of stakeholders outside the system. Part of it will be the rating agency, the ICMA or the label, the verifier, the certifier of the instrument, and of course, the listing of the instrument. So one key thing to note from this slide is the need for engagement within and outside the system to drive and ensure that a successful bond is issued. And taking it forward to the bonds framework, the Green Bond Framework, the 4 pillars were already mentioned during the course of this engagement. I will not bore you with further details around it. So some projects that are eligible for green bond issuance are renewable energy projects, energy efficient assets, clean transportation, climate change adaptation, sustainable agriculture, just to mention a few. And depending on whether it is certification or the verification or SPO, the labeling or third-party confirmation or affirmation of all the claims in terms of impact, in terms of use of proceeds, in terms of eligibility, and so on and so forth. And this, what we have, the slide that we have here just speaks to the 2 instruments, the 2 green bonds that Access Bank has issued, and the plan is also on the way to issue even another one as we speak. So the first one was issued 2019, 10.5 years, with ratings from Moody's and Augusto. And of course, I think I've already mentioned the listing. So and that is from what we have on the left-hand side speaks to the utilization of the instrument. All through the period of all through the life of the bond issued, the facilities were 100% utilized, over between 80 to 100% utilization year on year, all through the periods. And of course, it ticks the boxes of SDGs, SDG 9, 11, 13 for the first one. And the second one was a 50 million green notes issued in 2022, 5 years instruments. Of course, it's also listed on the London Stock Exchange. The pricing and other features and nuances of the instrument is what we could see on the right-hand side of the screen. So, there was a conundrum around in what denomination do I issue the bond? Is it going to be based in foreign currency or it should be based in local currency? What I have here, based on the hindsight of an organization that has issued both the foreign currency denominated green bond and local currency denominated bonds, there are 4 key points that usually come out depending to maybe like a determinant that guides in what denomination should it be issued, whether is in local or in foreign currency. The first one is around market size and liquidity. So the local currency bond markets, they're usually smaller and usually less liquid. So making less capital. So in terms of, and of course, the return in terms of pricing is usually high compared to foreign currency. But for foreign currency, it's more liquid. The market size is bigger and the cost is usually lower, but the transaction cost is usually high. Noting the fact that I mentioned several stakeholders from the rating agency to SPO provider, verification providers, and there are cost elements attached to each of the relevant external stakeholders. The second one is around currency risk. So for foreign currency bonds, of course, we know the exposure to foreign currency devaluation or depreciation, as the case may be. So if the instrument is issued in local currency, this risk is mitigated. It's just to give us a flavor of and the latitude to choose which one works for us, looking at the markets and market fundamentals that we have or we might be facing in our own currency. And the third point to note is as a link to what I mentioned earlier on around the investor appetite, the size of the instrument and the liquidity aspect of it. In terms of benefits, the benefits for issuance of a green bond cannot be overemphasized. It enhances liquidity base of the organization that might be issuing it. Access Bank has actually leveraged a lot from this. It enhances reputation. Like being the first mover of that instrument in our own economy, in our own country, it gave us a very significant first mover advantage. So make us a strong reference for several stakeholders to come to for support, guidance, and so on and so forth. And it also helps to explore uncharted territories, exploring new opportunities and breaking barriers, and creating new standards. So the whole lot of benefits from issuance of green bond. I just decided to highlight a few for want of time. So there are benefits, there are also challenges. The instrument has some things that will be called complex structure. There are several stakeholders within the system, starting from the business to ensure that you have proceeds that is fit enough, that's eligible for the instrument that is planned to be issued, adequate size such that it will not be suboptimized or subutilized. And apart from the business, you will be talking to Treasury, looking at the pricing, talking to risk management team, engaging even the stakeholders that will benefit. I'm talking about the customers around this. What was the difference between these and other conventional bonds, the brown bond, and the brown bond and the likes of CP or normal debt instruments. And so the meeting of the stringent criteria for booking of green bonds, ensuring that you align with the framework, the ICMA guidance, the certifier requirements, the second party opinion requirements, or even the rating agency and so on and so forth, will pose a challenge. And what Access Bank did to navigate through that when we issued, especially the first green bond, was adequate and thorough planning, deliberate and very robust engagement with several stakeholders within the system, getting the buy-in of the top management, the executive management, the board of directors, the treasurer, and every other stakeholders within the system, looking at even the portfolio that you have in existence to check, do you have enough loans or pipelines that will cover for this? Do they meet eligibility requirements and all those 4 pillars required either from ICMA or other standard setters, as the case may be? The second one is around local regulation that drives this. I mentioned the experience of Access Bank, that at the point that we wanted to issue the bond, the earlier on engagement with the regulator, support and making even enhancing the capacity and making even the regulator to possibly leverage with their network or look at best practice across other countries around what needed to be put in place to have a regulation. That engagement, as we think about issuing this, we look at what's happening within our own country, what happened within our own economy. Do we have requisite regulatory framework? Do we need to start engaging the regulators earlier on so that they will be able to have the regulation that we will be and will make the issuance very, very seamless. So engaging regulators, investors, other stakeholders will help to navigate through that challenge. The second, another one is around market readiness. A whole lot of things around expectation gaps. Some possible investors or customers that might want to offtake the proceeds of the instrument may have the thought around green bond that you are using to finance this. Is it about grant or seed funding or low priced instrument in terms of pricing? So the engagement, the conversation with the customers to let them know the value addition to their business will help a whole lot to manage the expectation gaps as they may arise. Local capabilities, enhancement of local capabilities, or leveraging on network provided by ICMA or other technical partners that the organization or the issuance will have. Leveraging on that earlier on will help enhance the capabilities of the local resource that you may have, and that will help. Of course, the point around early conversation, leveraging on network will help, and because Access Bank leveraged on this. And the last one that I would like to mention for the want of time are issuance costs and data paucity. For issuance costs, we've mentioned the cost elements. So there are agencies or corporations or maybe of technical partners that might be willing, based on the engagement with them, to possibly defray the costs or provide technical support, technical assistance to reduce the costs, especially when one is a first issuer. That window usually exists, and Access Bank leveraged on that, and I felt it's something that would be very good to bring out here. Then the last one is around the data paucity. So when we're talking of green bond or blue bond or sustainability linked bonds, it comes with transparency, the need for reporting of the impacts, and we know the data challenge that abounds around it, and leveraging on technical capacity. What Access Bank did in our own case was to look for those that will do the support for us in terms of training and enhancing our capacities to drive through that challenge. So by way of conclusion, the opportunities in green bond, blue bond, social bond, sustainability linked bond is so huge. Our continent has not really harnessed it that much compared to the size across the globe. Is over between 1% and 2% in terms of what we have been able to tap so far based on World Bank record. a few African countries have started to tap into this opportunity. And because of the whole lot in terms of liquidity, in terms of reputation, and so many benefits that comes to bear in issuance of these instruments, I would like to pause here, but to hammer on the fact that there are a whole lot of benefits that come with it, and encourage others that have not been able to tap on these opportunities to come through and take on the benefits. This is good for us as a continent, and of course, it will help us to connect to the bigger picture, the Paris goal, managing the fiscal and transition risk, and of course, stamping our organization or our continent on the footing of best practice and global standards as required. Thank you very much for your time, and this is my presentation. I'm waiting, hoping for questions for further clarity on any area that I might have missed during the course of the presentation. Thank you.
Thank you very much, Benga, and also thank you to Razvan. We have a couple of questions in the Q&A, but just to remind everyone, we have, if we need it, about half an hour left to answer your questions. So I want to encourage you to take this opportunity to enter your questions in the Q&A box, not in the chat, but the Q&A box, as my colleague Ludo highlighted in the beginning. Perhaps while we give everyone time, let's look at the ones that are already in there. And let's maybe start with the first one. What do you think are the main drivers for the reduction in SLB issuances? How can ICMA's principles help adoption and improvements? We have indeed seen a reduction in SLBs being issued. Sustainability linked bonds were initially, as I said, the guidelines or the principles rather came out in 2020, same year as the Climate Transition Finance Handbook. And SLBs almost immediately emerged as a transition finance instrument. They don't have to be. We've seen a couple of other SLBs as well being issued, for example, in Brazil, to underline a nature and biodiversity strategy, or also on gender equality. But really, mostly they have been used to underline transition finance strategies. As I said, there was a big hype in the beginning. We've seen predictions for a surge of the instrument, which hasn't really happened. If anything, issuance has gone back. However, we still think it's a great instrument. The reason why issuance has gone back, and encourage maybe Razvan to respond to that as well, I think is because there was a lot of bad press, often not justified, because it's really difficult to, what we say in the guidance, the KPIs, the key performance indicators, should be material and, more importantly, related to the bad press. They should be ambitious, right? And it's really difficult to, first of all, define what is ambitious and to come out with something that is ambitious. We've seen a lot of good examples of ambitious KPIs. However, we've also seen a few SLB issuers not achieving their targets. And that was really, again, something that we say in the guidance, in the Climate Transition Finance Handbook, for example, and in the SLBP. When you come out with KPIs calibrated to sustainability-linked bond targets, performance targets, that should be something that's under the control of the issuer. And unfortunately, we've had geopolitical issues, as you're all aware. We've had inflation, we've had so much going on that impacted the SLBs that were really not under the control of issuers. Energy security is something which contributed a lot, because we've had, for example, local governments telling their issuers to not reduce the coal production, for example, and things like that. So they couldn't really achieve the targets on that they had set out in that area. What can ICMA do? Or also just to say, because I think the investor community was aware that a lot of these things were not under the control of the issuer, the market hasn't really responded negatively to SLB issuers not achieving their targets. If anything, that kind of served to strengthen the market, we think, and really showcased that the guidance works and is really robust in that sense. What else can ICMA do? So we are not a regulator or anything. We can just continue to publish guidance and work on the principles. We have last updated the principles for SLBs, for example, in 2023, where following the issuances that Razvan presented on Chile and Uruguay, those were the first sovereigns to publish SLBs. We have adjusted the language because when the principles were published first in 2020, it was very much tailored towards corporates. And we've then adjusted that to incorporate other language for sovereigns. We also have something called a KPI registry, which we're constantly working on, which gives examples of key performance indicators that could be used for certain sectors. Again, it's not an exhaustive list and keeps developing. But that is something that I would recommend everyone looks at. And then we also have things like equally for use of proceeds bonds and SLBs, we have pre-issuance checklists to really help issuers or remind them what they should think of. So we do a lot in terms of guidance, and also just to say, when I presented the Secretariat and how we work with the ExCom, just to add to how we work every year when the ExCom term starts, which is typically in September, October, we also convene working groups and task forces for things that we would like to newly develop or update. So that's really the decision of the executive committee. And the working groups then consist of a very wide market representation of members and observers to the principles. So members are typically issuers, underwriters, investors of sustainable bonds. Observers can be anyone other in that area, such as stock exchanges, law firms, rating agencies, external review providers, NGOs, and so on. So a lot of organizations that work in that space. Razvan, would you like to add anything on SLBs? Or?
Sure, and maybe I will be a bit too transparent, but I have to say that I think if you take a snapshot at this point in time, there are like around $275 billion worth of SLBs globally. When you compare to the total label market on the bond side for around $4.9 trillion, so around 5-6% of the overall market. I think the challenge, and by the way, that's similar in terms of the share. So I was just looking quickly in terms of your leading jurisdiction in Africa. Like you have around $600-700 million worth of SLBs, perhaps 10-15 SLBs in total, also benefiting from Standard Bank. Congratulations. And then again, that's around, like overall, the total market's around 5-6% of the overall label bond issuance in Africa. That being said, I think there are like few challenges in terms of why we witnessed this reduction on top of what Simone kindly mentioned. One is regulatory. Why? You do have lots of regulatory pressure, especially like in developed markets like in Europe, where they had with the SFDR different parts, and only certain funds, they would have a limited allocation, perhaps like 15% or more to invest in such SLB. So one is also like investor demand. I think secondly, it's regarding the signaling. So there are multiple cases where it felt wrong to fail in the sense of meeting the KPI. And that's not bad. Actually, it shows that the market is working. The godfather of SLBs, NL, they showed it in a very well manner, like the market is robust. And also, I think Simone kindly alluded that even in their case, it wasn't their fault, but they respected their agreement and then went ahead and challenged. Like overall, I do believe that SLB is perhaps one of the brilliant products available out there to drive the behavioral change, the scale and speed that's required for the transition finance. I usually provide as an example when we have an oil and gas major that might still be able to go ahead with a labeled green bond, let's say to drive and invest in some renewable projects. But it's very hard for them to proceed with an SLB to have material KPIs and very ambitious targets covering the entire firm, like firm-wide perspective. And that's why I was also alluding for the sovereigns. That's a brilliant part because it covers the entire economy, and then it's also much easier there for the as a follow-up to other private sector sub-sovereigns and you name it to engage and also contribute in that respect. And I think those are like the key parts on top of what Simona. I also do see that Mark from Standard Bank actually did follow up and mention a bit on the Badea. What I have to flag there, that was a benchmark size issuance, 500 million euros, their debut social bond. I think that helped a lot. I was just looking, I think at the maximum order book was around 1.4 billion euros. So that investor demand really helped them to have and benefit from that price compression. So I think on the deal size can help. Also, I think on the currency, I know that sometimes it's a bit more challenging to access some of the African local currency space, and hopefully such solutions provided by African Development Bank or other IFIs or the TCX, hopefully they can support. I know that in the Nordics or Australia, there are also some aggregators in the municipality space where you gather smaller ticket sizes and you issue and benefit from a larger size plus rating, and those can help. In terms of when you compare to EMEA or maybe Europe, I have to say that I had the pleasure of being from an investor side as part of a DFI in emerging Europe, like in Greece, in Turkey, Romania, Baltics, Poland, where we're investing in the SLBs, and most of them, even from $60–70 million up to $500–600 million worth of issuances, all of them, they were really well oversubscribed. Perhaps it was also the very early stage kind of hype. It was also one of the first issuances in the respective markets. And that helped in terms of getting the demand and also seeing a bit of the discount. And one last part, I think those most issuances were like in euro or dollars. That'll be the last point. Thank you.
Thank you. There's a question, do you have any projects to implement in Ethiopia? I don't know if any of you knows of anything. I saw that UNDP, I think, is working with Ethiopia on the green finance. But otherwise at ICMA, we only provide in general principles and guidance as to what kind of project categories could be financed. So we're not providing catalogs on these are projects that can be financed in certain countries or regions. Benga, there's a question for you. How did you set the price for the green bond that you issued? Or how was that set in general?
Yeah, thank you very much for that question. How did we set the price? It was a question of 2 or 3 things. The first one, I think I mentioned it sparingly, the rating of the organization that is issuing the instrument is very critical. So your investor will want to know, aside from the benefits attached to the instrument that is being issued, what is the profile of the organization? It means there will be a third party, and there are several stakeholders that usually undertake that, depending on where you have. A few of the global rating agencies are like the Moody's, the likes of Fitch, and so on and so, S&P, and so on and so forth. So the risk of the organization, rating of the credit profile of the organization, they look at a whole lot of things, management profile, if it's a bank, non-performing loan, and the trajectory, a whole lot will be put together. Then the rating of the instrument, the bond that is being issued, will also be taken. So the risk profile is critical. The cost is also part of it. So a whole lot of things will be put into the bucket for the pricing with several stakeholders, especially the investor. Don't forget that the money is, and of course, the prevailing market in the country is the rating of the country's rating. A whole lot of things are put into the bucket, especially if it's an FCY denominated instrument where multiplicity of stakeholders across the globe will invest in it. If it's a local instrument, there are laws, there are capital market laws. The bond issuance has something to do with capital market. So, but part of what I said here now, they are still also applicable. The market rates. So the risk, that's the overriding point. The risk of the organization is a critical point, and there are stakeholders within the organization, like the Treasury will play a very significant role. Financial control will play a very significant role in addition to the stakeholders from the investor side. Those are the things that, so the market variables, market fundamentals are the things that will decide in addition to things that are within the entity's control. I hope that answers the question.
Thank you, Benga. We have two more questions that I think I'm going to take together, but we still have 15 minutes time. We don't need to use that, but if you have any more questions, please just type them into the Q&A. So the first one is, what role can the regulator play in increase issuances like Ghana, for example? We have a market since its launch of the market in 2022, but there's still no issuance. And then the other one, please, what are the key things that we need to do to accelerate sustainable bond issuances in Africa? So first of all, on regulators, I've shown you in my slides this overview or selection of a couple of countries and jurisdictions really globally that have adopted or adapted the principles and guidance. Among those were a couple of African countries as well. And that's really something that regulators can do. They like to do that, although the principles and guidance is available free to everyone on the ICMA website. We also have the versions translated into different languages, so numerous languages really, even Arabic and so on. But often regulators like to take the principles and guidance and put them together and also add some local adaptations to that. So this is how regulators typically help. In general, I would also like to add a country doesn't have to issue sustainable bonds. So labeled bonds, of course, have the advantage of being more transparent. That's something that especially international investors like. So when you issue a labeled bond, such as a green bond, for example, which is still the most popular one, then issuers follow the principles. So you will have transparency on what projects are being financed, how is the money being allocated, what impact has been achieved. But theoretically, the transition and projects in particular don't have to be financed through sustainable bonds. So we often get this question also from emerging markets quite often, why should we issue a green bond if we don't get a greenium, right? Which is the premium that we sometimes see when there is a lot of demand on good quality bonds. Again, a greenium is not guaranteed, and that shouldn't be an argument to issue sustainable bonds. So really, if there are any projects to finance in Africa, the transition related projects come to mind. Also nature and biodiversity could be something, or blue bonds for ocean finance. Then that could be financed through a sustainable bond, but they don't have to. So finance can also be raised through conventional bonds. Raswan, did you want to add anything, or Benga?
Sure, I can add in a sense. Oh, sorry, like the camera is off. So I think I was just looking in terms of the average deal size so far is around 70, 80, 90 million dollars. And in such cases, and especially if you want to attract larger investors globally, it does help to have a bit of more sizable benchmark size issuances. We're here again, I'm thinking of, and I think Simone and the colleagues here already mentioned, if you have at a sovereign level, quasi-sovereign, it provides a good signal to the market. Again, maybe going to the credit enhancement and the guarantees side, that can help a lot on the credit rating story. There are different cases, successful case studies out of your jurisdictions, as was mentioned about the SCATEC one in Egypt, Development Bank of Rwanda, also I think in Gabon of the debt for nature swap, and a few other names. So do try to leverage on such tools which are available. Another idea potentially could be in terms of the aggregators. I know, and there are multiple case studies in Australia, I think also in New Zealand, also like in the Nordics, and I think also in Germany, where they leverage, especially the municipalities. So they gather lower amounts, but then they issue and also benefit from a sizable, larger bond issuance, but then also from a better credit rating sometimes. And these are aspects that can definitely address. And then on terms of the currency, that's something that's been there. It's a hurdle for the market, especially like if you want to proceed with the local currency. There you have to develop your own investor base in terms of the pension funds, insurance companies, the long-term investors that might also be natural buyers of such labeled format, or try to look with IFIs or other partners in terms of cost-efficient solutions and swaps.
Thank you, Razvan. And we have had one more question. What happens if KPIs are not met? Can the SLB proceeds be used for cash management purpose and replenish? So first of all, with SLBs, as I said, the focus is not on the use of the proceeds, but rather on the strategy of the issuer. And for that reason, KPIs, or rather the sustainability performance targets, should be reached. So the KPIs, to give you an example of how those two relate to each other, a KPI could be greenhouse gas emission reduction, and then the sustainability performance target, the SPT, would be by how much you would like to reduce that. So by 50%, for example. And then you should also add a year by which you want to achieve that, which shouldn't be too far in the future, because we want to actually see the issuer be accountable for what they set as a target. So SLBs, yeah, the targets should be met, but as we said before, we have seen issuers not meet their targets in the market, but that was explained by circumstances not under their control. And in that case, investors will understand, but usually KPIs should be material, and sustainability performance targets should be ambitious, and that's really what the SLBs are based on. Razvan or Bengad, would you like to add anything?
I think that is spot on. So, and just to clarify and reiterate, it's not a problem to fail in that respect. That also means that maybe the targets were ambitious, of course, and as part of the process in engaging with the investors and the underwriters and all stakeholders, we also agree upfront in terms of what would be the step up potentially in terms of the size, and that can also vary depending on the investor demand, the appetite, and the overall pricing.
Okay, I don't see any other questions. So, Abena, do you want to close the webinar in that case? Nothing else seems to be coming in. Or maybe just, sorry, maybe a last one.
Was
one last one just being added. There is an idea that part of carbon tax should be used to provide subsidy for those who met the KPIs. Is this a feasible strategy? Razvan, do you want to comment as an underwriter? We don't particularly comment on these details in the principles and guidance.
Yeah, I have to say it's a challenging question to say. If you have let's say a mandatory market like with the EU carbon market, there might be some let's say developments, but it has to be very well cleared, maybe at the jurisdiction level, how you actually provide the subsidy, like not to kind of challenge part of the competition inside. So. I think has to pay a bit of special attention to that, especially if there is not a mature carbon market, or if you look more into voluntary markets rather than the mandatory. But yeah, it's an interesting concept to test.
Thank you. Yes, I'm sure we will see lots of innovation in the sustainable bonds market in coming years. So with that, I think we can bring this to an end. I'll hand over to Abina, and just to say, because there was a question on that as well, we will send a recording of this webinar to all the registered ICMA members. So thank you very much for your attendance, and over to you, Abina, to close us off.
Thank you very much, Simone. First, let me say a huge thank you to all our speakers today. I think you've done a great job at explaining and helping us understand the trends and what has happened in other markets so far. And I think the team, the participants on the call are thinking about what the opportunities are. So to all of you, I noticed at the height of it, we had over about 117 participants. Thank you all very much once again for joining us and for the very insightful questions that you've all shared across Africa, from South Africa to Ethiopia to Nigeria and other places. I think one of the burning things that remains in people's mind is what is the value of these green issuances? Why do I go through, as an issuer, as an advisor, all this extra layers of work to produce documentation to engage investors, and I don't see a price differential. I don't see a discount to what Wenger called the brown bond. And I think that's one of the key things we need to address in the market. I don't know what the experience in Europe is, but how do we really come together to ensure that issuers that are going through this effort get that price recognition in their issuances, aside meeting the SDG goals, which are good for all of us. And so this is the start of a conversation. As was shared earlier, ICMA has lots of training programs that the market can participate in to take advantage of these opportunities to expand their own understanding and to build capacity. And we at the GSC will work with the market and all regulators and stakeholders to ensure that more of these products come to all the securities exchanges in Africa. So thank you all very much once again. And at this moment also, I'd like to announce that next week we have our next set of training with ICMA. They've been so generous, and we'll be taking the market through applying the global master repurchase agreements as we work to develop liquidity on our bond market. So I look forward to all of you, all 100 and more people joining us next week, Monday, for the ICMA training, so that our debt capital markets can serve the development as well as the wealth creation needs of Africa. Thank you, everyone, and have a wonderful day.
Thank you. Bye, everyone.